Hello and welcome. My name is Cooley. I am the Targeted Outreach Director for the Department of Financial Protection and Innovation. Thank you for joining our webinar this Thursday afternoon. I usually introduce my other co-panelist here. She is Selena Damian. She is the DFPI's student loan ombudsperson, and she will be providing a lot of very critical information, mostly about public service loan forgiveness and the expiring waiver soon. She is having a little bit of technical difficulties, so I'm going to go ahead and get started, and hopefully she can rejoin us in a minute. So let's go ahead and get started. First things first, a little bit of housekeeping. This webinar is being recorded, and we will publish the recording onto the DFPI's YouTube channel. We will also email everyone who registered for the webinar a link to the YouTube video, as well as a link to download these slides. So right now your microphone, video, and chat has been disabled, and it will be disabled for the duration of the webinar. But if you do have a question, please feel free to submit it through the Zoom's Q&A feature. And Selena, as soon as she gets back on, she's going to be able to jump in. Actually, hold on. She just texted me real quickly here. Here we go. See if I can get her on. So sorry about that. So if you do have any questions, please submit it through the Q&A feature. We will bring her, we will answer the questions as we go, as well as we have a dedicated Q&A session at the very end, and where we'll be answering your questions. Also, you know, the student loan world and news and keeps changing. One thing we like to tell everyone is, as of this moment, Selena and I just went through the slides. We are presenting the most up-to-date information. Things may change in the future, but as of right now, this is the most up-to-date information. Okay, with that, I would like to hand off to Assembly Member Lisa Calderon for some welcome remarks. Lisa.
Thank you, Q. Good afternoon, everyone. And I just want to thank you for joining the Student Loan Workshop webinar. College affordability is one of my top priorities. And so I was really excited to support the expansion of the middle class scholarship and increase Cal Grants funding last year. You know, and I'm also pleased that one of my pieces of legislation dealing with scholarship displacement was signed by the governor this year. Assembly Bill 288 ensures private student aid grants are not displaced by financial aid benefits offered by colleges. So this was a 2-year bill, and it was a labor of love, and I'm really pleased that he signed the bill. You know, and although these resources weren't available to me when I was a college student, I recognize that we need to invest in our students, and that's why I'm thankful that the Biden administration has laid the foundation for student loan forgiveness. And as Q mentioned, you know, that today you're going to be hearing the most up-to-date information, and the program is being blocked by the U.S. Appeals Court. I know how critical this resource is for all of us, and so I'm really hopeful that we'll get the resolution that we want. So please continue to invest in yourself and take full advantage of the opportunity here today. I'd like to thank our wonderful partners, the California Department of Financial Protection and Innovation, and many thanks to your dedicated staff. I know you've worked really hard to put this webinar event together, and we really appreciate your partnership. Please feel free to ask the questions you need answered, and don't think twice about contacting my office if I can be of any assistance at all. This webinar will also be available by visiting my website. Thank you, and let's get started.
Thank you, Assemblymember Calderon, and thank you for all the hard work you've done. Also, very special thank you for helping us put this webinar together. Okay, let's go ahead and get started. I know there's a lot of really great information. First off, I also want to throw out a special thank you to the Campaign for California Borrowers' Rights. It is a number of nonprofit organizations who have come together. It's the leading statewide coalition for students, higher education advocates, and borrower protection organizations. Some of the nonprofits who are in this group is the Student Borrower Protection Center, the Student Debt Crisis Center, also Next Gen California, Consumer Reports, and Young Invincibles. These nonprofits come together and they help advocate for student borrowers, student borrower rights, as well as provide us with assistance with information and presentation at our events. So again, special thank you to them. With that, I would like to present Selena Damian. Selena?
Thank you, Ku. Good morning, everyone. It is my pleasure to be here today. As Ku mentioned, my name is Selena Damian. I am the Student Loan Servicing Ombudsperson at the California DFPI. For those who are not familiar with our agency, DFPI is California's Consumer Financial Protection Agency. In 2020, California signed the California Consumer Financial Protection Law, which did a few things. It changed our name from Department of Business Oversight, for one, and it also gave us authority to conduct oversight on previously unregulated providers of financial services, which include debt collectors, debt relief companies, credit reporting agencies, and student loan servicers. As the Consumer Protection Agency, we license and examine those companies. We accept and investigate consumer complaints or student borrower complaints. We take legal action when companies are not in compliance, take legal action as necessary, and we conduct education and outreach such as this one to enhance consumer awareness and protect them from fraud and abuse. Next, please. So how much student loan debt do we have in California? There are 4 million Californians who owe approximately $156 billion in federal and private student loan. 35 to 49-year-olds owe the most debt on average, and the average debt load of a California borrower is $37,000. Student loan debt disproportionately impacts people of color, with Black women carrying the most debt. Prior to COVID-19 pandemic, approximately 500,000 borrowers were behind on paying their loans, and currently the total student loan debt in the United States is nearly $2 trillion and is increasing. Next, please. So borrowers do have certain rights that on the federal level that are determined by the Higher Education Act, and they're provided by the federal government. However, due to a lack of oversight and the administration of federal student loan programs, we are in the crisis that we are in now, as far as student loan debt increasing so drastically. In California, borrowers do have a special protection known as the California Student Borrower Bill of Rights. The Bill of Rights was introduced as Assembly Bill 376 and was signed in 2020. It became effective January 1st, 2021. The Borrower Bill of Rights applies to student loan servicers doing business in California, including state licensed servicers, as well as banks doing servicers. And it applies to borrowers with both federal and private loans. And just for everyone's information, just so they know the difference, the servicer is they are the borrower's main point of contact. It's different than the lender. So for federal loans, the borrower's lender is the Department of Education. They're the ones who actually lend the money and set the terms for the loan. The Department of Education contracts with these servicers who send out the bills, keep account history, track payments. They provide the options for repayment plans. So they work for the Department of Education to assist borrowers. So prior to the Student Borrower Bill of Rights, borrowers were faced with navigating a complex system with servicers losing paperwork, misapplying payments, being unresponsive, so not helping borrowers as they should. California is only one of 13 states that has established such advanced legislation to strengthen oversight of student loan servicers and to protect Californians. What this bill does is that it prohibits servicers from engaging in abusive, unfair, or deceptive practices. It requires that servicers work in the best interest of borrowers and that they provide accurate information. That's information on their repayment plans, on their options, just accurate information to prevent borrowers from going into delinquency or default. It also establishes special protections for military borrowers, borrowers working in public service, older borrowers, and borrowers with disabilities. It also established my position, and one of the most important duties that I have is working with borrowers directly and helping them understand their rights and their options. Next, please. I'm going to give you just an overview about student loans. It's going to be very important that a borrower understands before anything what type of loans they have. We're going to be talking about updates, all these changes going on, programs that are taking place. But in order for a borrower to understand what action they need to take, what a program they qualify for, they need to understand what type of loans they have. There's going to be two types of loans, federal and private loans. Federal loans. After 2010, all federal loans that are being given to students are direct loans. Direct loans, there are two types of direct loans. Most of these are going to undergrad students. There's going to be subsidized and unsubsidized loans. They're both direct loans. The only difference is that subsidized loans, the government or Department of Education pays the interest while the borrower is in school, and the loan doesn't start accruing interest until the borrower leaves school. Unsubsidized loans, interest starts accruing from the day that that loan is dispersed. So it is accruing interest while they are in school, and ultimately it increases the size and the cost of the loan. But they are both federally owned direct loans. Subsidized, unsubsidized only has to do with the interest. Then you have your direct plus loans. These are loans with fixed interest rates. They are unsubsidized, accruing interest from the start, and they do have origination fees. These do require a credit check, unlike regular direct loans. You have your plus grad loans that are available to graduate or professional students pursuing graduate or professional degrees, and you have your parent plus loans. These are available to parents of undergrad students. One thing that I just want to mention on parent plus loans, they are probably the one loan with the highest interest rate. There is no grace period for parent plus loans, and unlike the other loans, there is no minimum of the amount a borrower can or the parent can receive. The Department of Education or the schools do not verify a parent's employment to find out how much a parent makes if they are able to pay back the loan. They only look at the student's cost of school attendance. Therefore, a parent could be making, be on a lower, more moderate income. And if there is a school that is very costly, they will be given as much amount as the student needs. However, a parent and a student want to be very careful about how much they are borrowing, because as I said, these carry the highest interest rates, higher only ones with origination fees. So it is very important to really sit down and find out how much you're taking out on these parent plus loans. Then you have your direct consolidation loans. So these are not given out to students. However, when a borrower does have a mix of maybe direct plus loans or direct loans, or even other type of loans, they're able to consolidate or combine them all into one single loan with one loan servicer and one fixed interest rate. It's at no cost to the borrower, but it may increase the total balance of a loan. It is similar to refinancing. So again, very important to understand the terms. Fell and Perkins loans. These are loans that they've already been discontinued. Fell loans are subsidized loans that are made by a private lender and insured by the Department of Education. Perkins loans, they're subsidized loans available to undergrad students, and they are provided by the schools. The reason we mention these is because there are still a lot of borrowers that are still carrying these loans. So a borrower that maybe went to school prior to 2010, maybe for their undergrad studies and then went back to school, they may have a mix of Fell, Perkins, direct loans. So very important to know what type of loan you have. Next, please. Then you have your private loans. These are private loans. Private loans are made by lenders such as banks, credit unions, schools, or state agencies. These Private loans are not funded or subsidized by the federal government. They don't offer flexible repayment terms and forgiveness options provided by federal student loans. They do require a credit record and a cosigner. Very important right now. I get a lot of questions on private loans. If any borrower with the federal loan is able to refinance into a private loan, they may get an offer from a private bank, a company, saying that they have a better interest rate. That's fine. A borrower is able to do that. However, it's important to know that once you refinance into a private loan, you cannot revert back to a federal loan, and you will lose out on all the benefits. So for example, right now, all these programs that I will be talking about, we will be discussing, they are not available to borrowers with private loans. Next, please. Okay, these are some of your servicers. The federal servicers are going to be Mohila, Nelnet, Navient, Great Lakes. Private servicers, you still have Navient that's still servicing both. You have your SoFi, Sallie Mae, and then your banks, Wells Fargo, Discover, that have those private loans as well, private student loans. Okay, I will start with some federal student loan updates that have already been in place. The first one is under the CARES Act, all federal student loan payments were paused through the end of this year. It is the final pause, and during the pause, all interest rates were set to 0%. All borrowers with direct loans or those loans owned by the Department of Education were paused. What servicers were required to do during the pause was to report as if regularly scheduled payments were occurring, and are currently reporting monthly payments at $0. Regardless of any relief or forgiveness option that a borrower applied for, it is very important that a borrower prepare for repayment just in case they still have to continue repaying. A lot could have happened in 2 years as far as family size, income size. There was a huge exodus of servicers. So during this payment pause, a lot of borrowers will be starting repayment with new servicers. That means that their accounts were transferred from one servicer to another. And if a borrower was not paying attention or really not, reading their emails or letters, they may be with a new servicer. So it's very important that they know who their servicers are. You can log on to studentaid.gov. That's going to be your main hub of information for everything right now. You can find out who your servicer is, find out if you need to change your income, your repayment plan based on your income. So very important to be prepared. Additionally, another really great announcement that has been made is about a one-time account adjustment of IDR qualifying payments. In addition to the relief, the public service loan forgiveness, there is another lesser known income-driven repayment forgiveness plan. Under that plan, if a borrower makes payments under an income-driven repayment plan for a period of 20 or 25 years, their loans are forgiven, or the balance of those loans are forgiven. Well, again, because of servicer mismanagement of loans, because of just a historical lack of oversight, servicers were not putting borrowers on the correct plan, not providing the right information. Therefore, the Department of Education is making an adjustment where they are giving credit towards that forgiveness, and PSLF, it will count for both. They are giving credit for any months in which borrowers made payments, regardless of the payment plan, the repayment plan. They will be giving credit for 12 or more months of consecutive forbearance, or 36 or more months of cumulative forbearance. Again, this is because servicers, instead of helping borrowers get on the correct repayment plans, what they were doing was they were putting them on forbearance and deferment, hardship forbearances, not understanding or not informing the borrowers that they would lose credit towards these forgiveness programs, and that interest would still be accruing and their balances would be increasing. Therefore, to alleviate that, they are making these adjustments. They are also giving credit for months spent in deferment prior to 2013. This is really important, and it's going to benefit borrowers that have been paying for 20, 25 years. Maybe they were on a standard plan, or maybe they were on an incorrect, maybe they had an incorrect loan. Will be crediting and trying to get borrowers closer to forgiveness. Department of Education estimates that they're going to be probably about 50,000 borrowers who receive automatic forgiveness, and about another 4 million borrowers that will be receiving credit towards income-driven repayment forgiveness and public service loan forgiveness. With the IDR forgiveness, the difference is that it's a longer term and borrowers don't have to be in public service, but these are going to go hand in hand with public service loan forgiveness. So they're just really trying to give borrowers as much credit as possible, as long as they were paying their loan, even if they were in forbearance and deferment, and it was not to a fault of their own, if it was just servicers putting them on those statuses. Next, please. Now I'm going to talk about public service loan forgiveness. Public service loan forgiveness has been around since 2007. It was created to encourage individuals to enter and remain in public service. Under the program, you have to meet certain requirements, and your balance is forgiven after 10 years or 120 payments. Under PSLF, the normal requirements, you have to have the right type of loan. You have to have a direct loan, not in default. You have to be under the right type of repayment plan, an income-driven repayment plan. Then you have to have the right type of employment. A qualifying employer for public service loan forgiveness includes a federal, state, local, or tribal government organization or entity. Military service counts as a qualifying employer. 501c3 or nonprofit organizations count as our qualifying employers and meet the requirements. Then you have to have the right number of qualifying payments. You have to make 120 on-time, fully scheduled, separate monthly payments to be a qualifying payment. One more thing on the employment, I wanted to make sure I mentioned today, it can be any position within the agency. A borrower can be in maintenance and admin, research, legal. It does not matter, as long as that employer is a qualifying employer. Next, please. So the limited PSLF waiver was created as a result of all this lack of oversight, all this mismanagement of programs, where Department of Education realized that borrowers were just not being helped. Borrowers were being misled. They were just not being given the accurate information. In 2017, when the first cohort of borrowers applied for PSLF, there was a 99% denial rate. This waiver was created to remedy that. Under the waiver, most PSLF qualifying payments rules have been suspended, and borrowers are urged to apply, especially if they were denied before or do not have the 120 qualifying payments. Department of Education is going to go back and review all those denied applications. And this number is wrong, but since the waiver, it's approximately 236 borrowers have already received cancellation since its announcement, and we expect it to be much higher because of the influx of last-minute applications and the delay in processing. Next, please. I'm going to go over some of the requirements or the changes in requirements under the waiver. Under normal requirements, a borrower has to have direct loans. During the waiver period, a borrower who doesn't have direct loans, and they have these older FFEL Perkins loans that are not government owned or Department of Education owned, they can consolidate their loans into direct loans without losing previous credit. If under normal PSLF rules, if a borrower consolidates their loans into direct loans, they have to start at zero, and they lose all the credit for previous employment, previous payments. That is not happening under the waiver, and this is where the biggest benefit comes to play. A borrower that has been in public service 10 or 15 years, has been paying on their loans for the same amount of time. Anything after 2007 counts. They can consolidate those older loans. If they have a combination of direct FFEL loans, they can consolidate and receive credit for all that time, bringing them closer to forgiveness. If someone applied before and they were told, oh, your loan doesn't qualify, but they have time in public service, this is where that benefits them greatly. They will receive credit for those previous payments made on those loans. Parent Plus loans are not included unless consolidated. For Parent Plus holders, if a parent has Parent Plus loans, or a borrower has Parent Plus loans they took out for their child and they only have Parent Plus loans, they can consolidate them into direct loans, but they will have to reset their account at 0. However, if a Parent Plus or a parent has Parent Plus loans they took out for their child and they have their own loans that they've been paying for years, they are able to consolidate the Parent Plus loan and, let's say, a FFEL Perkins loans that they may be holding for a long time, and they will get credit under the payments they made on that FFEL Perkins loans. They will be able to include the Parent Plus loan with their loan. That's how Parent Plus borrowers credit under or benefit under the waiver. Now, one thing to consider is for those borrowers that do have FFEL and Perkins loans, and they have direct loans, so they have a mix of direct FFEL loans. If you consolidate them together, you will lose credit for the 10 or eligibility for the Biden $10,000 or $20,000 relief, because you're mixing your FFEL and direct loans. If you consolidated prior to September 29th, let's say you a PSLF path back in June, July during the summer, and you consolidated prior to then you qualify. But if you start the consolidation process of FFEL and direct loans at this point, you will lose credit for the Biden relief. So a borrower really has to look at their situation. You may not benefit from PSLF. You may just want to do the Biden relief. It all depends on your account balance and really what your goal is long-term, which is probably getting rid of that balance. But every borrower situation is unique. So it's really important to understand the terms. Some may benefit from the waiver, some may benefit only from the relief, and some from both, just depending on the balance and your type of loans. Under the waiver, the employment requirement has not changed. You still need to have that qualifying payment, that qualifying employment while making those payments or having those loans. The only requirement that has changed during the waiver is that you do not have to be employed at the time of forgiveness. This benefits borrowers who have already retired or have moved on from public service, but did work for 10, 15 years in the public sector or for a nonprofit organization. Again, the qualifying payments requirement, past periods of repayment, whether or not you made that payment on time for the full amount due or on a qualifying repayment is eligible. Certain periods of forbearance and deferment may count. They will count as per. That's where these are going to go hand in hand. You apply for the waiver, they're going to give you credit as soon as you certify your employment, and then they're going to go and automatically credit you for those forbearance and deferment months that are eligible. It's not going to happen all at one time, but it is going to happen. COVID forbearance months count towards PSLF. That's about 30 months where borrowers did not have to make payments since March of 2020, where they will be receiving credit towards that 120 count. Next, please. So what does a borrower have to do to find out if they qualify? You need to just, first of all, find out if your employer is a qualified employer. Student aid, the Department of Education on their website has an employer eligibility search tool. Everyone needs to obtain their employer's federal employee ID number or a FEIN. That number can be found on your W-2. It can be found, you can Google it as well. You go on here on the employer search. You don't have to create an account. You just enter the employer's FEIN number and you will see if they are already qualified or eligible through Department of Education. All that means is that someone already went through the program and therefore they're already eligible in the system. If you know they meet the requirements of a qualified employer and it pops up ineligible, it only means that maybe someone from that agency has not applied yet, but you still want to, if you think they're a qualifying employer, you go ahead and apply. IRS also has a 501c3 search tool to look up any nonprofit organizations if you need to look up previous employment. Again, as I said earlier, you need to know what type of loans you have. I get tons of questions. We get tons of questions saying, do I qualify? We can't help anyone. You're not going to really be able to get anywhere if you don't know what type of loans you have. Studentaid.gov is going to be your main hub. There you will be able to download all your loan information, even loans that have been paid off, any loan that is back, those Fell Perkins loans that I mentioned, even though they're not complete or full federal loans, you will see those loans there. When you download your information, you will see the word direct, you will see the word Fell, you will see the word Perkins. Therefore, you will be able to tell what type of loans you have. Once you download your data there, then you can say, okay, this is what steps I need to take. If you're seeking PSLF, again, this is all for PSLF, and you have the qualified employer, you may need to consolidate your loans. You can, you're going to do the consolidation right there on studentaid.gov as well. I know the deadline is October 31st and everyone's about that. As long as you use studentaid.gov to complete these two processes, Department of Education has said that they will count borrowers under the waiver. So for the consolidation, the consolidation is done. It takes about 30 minutes. You will be asked to switch select an income-driven repayment plan. It will ask you if you're doing this for PSLF purposes. You will say yes. You will select an income-driven repayment plan. There's 4 different income-driven repayment plans. And then you will be asked to pick a servicer. Mohila right now is the PSLF servicer for everyone. So you will pick Mohila. You will finish that process and you should receive an email just saying that you did the process. You will not get confirmation that your loan was actually consolidated and transferred to Mohila for about at least a month, normal time. So right now it may take longer. So consolidation is one process. If you don't need to consolidate, you start the PSLF tool. Well, regardless, if you have to do consolidation, you do that. If not, then you just go straight to the PSLF help tool. In the PSLF help tool, Cool, can you move on to the next slide, please? Under PSLF, the studentaid.gov help tool, you are going to generate this application that you see here. It's a 2-page application. The PSLF for normal PSLF and waiver PSLF is the same application. It's not going to change. It's the one that's been in place. There is only one application. When you log on to the PSLF help tool, some of this information will be auto-generated. You will be you will have to download this application, print it, and provide it to your employer to sign. You may not need to print it, email it to them. This application does require a signature. Now we are so close to the deadline. All Department of Education is saying that you need to do is generate the application. When you generate it, of course, you're not going to be able to sign it, but create the application on the PSLF help tool, and you will also be counted under the waiver. So the consolidation process started on studentaid.gov, and this application also started on the same site before October 31st, and you will qualify. Once you generate the application, you print it, or you just decide to email it, it will require a drawn or wet signature. That means you cannot use the electronic signatures those ones that have the same font. It actually has to be either signed, scanned, or you can use Adobe has a tool. Some of the laptops where you can just sign with the pen, they have that. It has to be a drawn signature. Make sure that all the information is legible, it's clear. Make sure that you're reading the instructions. It is very simple, but for some reason, sometimes people get confused. You will need, again, that FEIN number. Who signs this application? Anyone in your organization that has authority to certify your employment. For any state agency, government agency, really it's the personnel, HR person, analyst, specialist, and it can be within any other organization. Again, anyone that has access, that's an authorized official. It can be a manager, anyone that can just certify that you work there. If you have multiple employers, you will need more than one of these forms. As long as you generate one form under the PSLF Health Tool prior to October 31st, you will qualify. On page 4 of this application, there are instructions, but this form is going to Mohila. It's not coming to us. It's not going to Department of Education. It's going to that servicer. If you are not currently with Mohila, your consolidation has not been complete. Prior to that, you weren't with them. You will have to mail or fax a form. You will not be able to upload because you can't create an account if they don't have all your information yet. So just this is the form that you will be using for the waiver. After the waiver, very important. You can also mail it. If you decide to mail it, just make sure it's signed by October 31st. It's dated prior to then, and then you can go ahead and process it. Next, please. And then now I am handing it back to Ku, and he will be talking about the Biden debt relief.
Thank you, Selena. A lot of really great information about the Public Service Loan Forgiveness Program and waiver that is expiring on Monday, which is October 31st. We did get a question in the chat, which, by the way, if you do have any questions, please feel free to submit it into the Q&A feature. We will answer those if we can, but we will also save a couple for the end of this webinar where we have a dedicated Q&A session. One of the questions we got is, hey, what's the difference between Public Service Loan Forgiveness Program and the student debt relief? And I'll and Selena, correct me if I'm wrong, but so the Public Service Loan Forgiveness Program, or what we're calling PSLF, is essentially available only to people who have worked in public service, right? Those who have worked full time, and then of course with federal loans or certain types of loans, and so there are certain restrictions to those. But the benefit is that after making 120 qualified payments, no matter how much loan you have left, all that debt that you have after that 120 qualified payments will get forgiven, right?
Correct.
Student debt relief, which was announced, I want to say about, it was announced a couple of months ago, and the application just came live about a week ago. Student debt relief can only forgive or you provide cancellation of up to $20,000 of student debt. And that's if you're qualifying Pell Grant, you have income limits, which we're going to go over here in a second. But that is available to anyone that has a federal loan or a loan that is held by the Department of Education. And again, we'll go through some of those requirements. So that's kind of the major difference, right? Public Service Loan Forgiveness Program and the waiver only applies to individuals who have public service loan or who are in the public service or who've worked for a nonprofit. The student debt relief is available for anybody with a federal student loan, right? And also qualifies under certain restrictions. Okay, so with that said, I'm going to dive into the Biden-Harris administration's student debt relief plan. And the first thing to talk about is that the application is officially live. So I'm going to fly through these really quickly. Many of you may have heard, but some of you may not. The application is live. Here's a direct link to it. You can apply by December 31st, which is next year, 2023. I would not wait. I would probably apply sooner rather than later. The application takes less than 5 minutes. It's available in English and Spanish, and a paper application is coming soon. So again, go to that link and apply if you are eligible. We'll talk about eligibility here in a minute. Okay, so what to expect after you apply, you should receive a confirmation email. And then the education department, after they verify, their education department will verify your eligibility, determine your level of relief, whether you have a Pell Grant or not, whether you had a Pell Grant or not, and may reach out for additional information if they need it to verify your status. But once they process their application, you will be notified, and your servicers will notify you that the debt relief has been applied to your student loan debt, right? So those things are some things that you might expect after you've submitted your student debt relief application. All right. So eligibility. As Selena, she did a fantastic job talking about the different federal loans. I'm going to just say, federal loans are the ones that are eligible for student debt relief, right? So that's whether it's a direct loan, a FEL loan held by the Department of Education, a Perkins loan held by the Department of Education, defaulted loans, or certain consolidated loans. I'm not going to dive into the little, nitty gritty here, but essentially your consolidated loans have to all be held by the ED. Certain FEL and Perkin loans that were not held by the ED, but you consolidated them before the 29th would still make you eligible for student debt relief. And of course, private loans are not eligible for student debt relief because the federal government doesn't own those. Okay. The other big requirement for student debt relief is, of course, income limits, right? Again, not going through all this, but the two big one is if you are single and you are making if you made 125,000 or less in the year 2020 or 2021, right? So that'll be on your 1040 IRS form. You would be eligible for student debt relief. Of course, if you're also married and filing together, if you made together 250,000 or less in your 2020 or 2021 1040 IRS form, you would be qualified. And again, all based on AGI, which is adjusted gross income, right? Okay, student debt relief requirements. So if you have the correct loan type and you meet the income limits, how much of student debt relief could you get? Well, you could get up to $20,000 if you received a Pell Grant at any point in time in your college career. Could be your freshman year, could be your senior year, could be a summer session. If you got the Pell Grant anytime in your college career, you are eligible for up to $20,000 in student debt. If you've never received a Pell Grant, then the maximum you can receive is up to $10,000 in student loan debt relief. If you want to know your Pell Grant status or history, go to studentaid.gov, log into account. It'll have it right there. Okay. All right. With any kind of government assistance that is put out there, obviously there are individuals who are going to try to take advantage of it. Something that we're seeing a big trend of, which is a growing trend of student loan scams. We, along with many other organizations like the Consumer Financial Protection Bureau, and many others, of course, DOJ, they're warning individuals, beware of student loan scams. Scammers are contacting borrowers by phone, email, and mail. They might be using, an official looking logo. They might actually be posing as officials. What you want to do is make sure to protect yourself. There is nothing a company can do for you that you can't do on your own for free. Okay. Again, there's nothing that anyone else out there can do for you that you can't do on your own for free. They're probably going to be trying to charge you some kind of monthly service or some kind of assistance fee, all that kind of good stuff. A lot of the information is available at studentaid.gov. You can help yourself out without paying anything. You want to consolidate your loans. You want to do the public service loan forgiveness application. All of that can be done for free. There's a lot of tools out there. Loan servicers and the federal government do not call borrowers. Okay, they do not contact you directly. Maybe by email, but definitely not by phone. So if someone calls you pretending to be your loan servicer, pretending to be someone from the Department of Education, it's better to just hang up and then log into your studentaid.gov account. They'll have notifications there, and especially if you apply for the student debt application, you should be getting an email from a studentaid.gov email account. Finally, of course, never give out your login information and passwords. Don't give out your personal information, especially over the phone. It's a very bad idea. And then if you do feel like you have been a victim of fraud or scam, please, please, please feel free to submit a complaint to the California DFPI. The web address is dfpi.ca.gov/file-a-complaint. We take complaints of all sorts of natures, whether your loan servicer is giving you problems, or you need help, or if you, like I said, you feel like you've been a victim of some kind of student loan scam, file a complaint with us. We will investigate. All right. Here we are, Q&A session. Excuse me. A lot of really great questions that I want to run through, and Selena will help me answer these. Also, if you do have any questions, again, continue to put them into the Q&A feature. We will answer them as best as we can. Okay, Selena, here we go. First question. Wondering if there are tax liabilities at state or federal level for student loan forgiveness. So I'm sure they mean either the student debt relief and maybe even public service loan forgiveness.
Yeah, no, that's a good question. PSLF is not taxable on the state and federal level. PSLF forgiveness is tax-free. The Biden relief, the 10 or 20,000 on the federal level, it is not taxable. As of today, right now, it is taxable on the state level. However, as we speak, there's current legislation being worked on to make it not taxable. So there is of course, there is a process that we need to go through. It does need to be signed by the governor, but they have said that they will try to have it not be taxed on the state level. So at this point, that's where we stand with the Biden relief.
Thank you, Selena. Great question, great answer. Okay, next question. Public service employment. So I suspect they're talking about the public service loan forgiveness program. What about part-time employment? Does that count?
The requirement is that a borrower has to work 30 or more hours a week. If they have two part-time employments, so they can, as long as the combined average meets 30 hours a week, they can apply, but it does have to meet at least the 30 hours a week.
Okay, great. Here we go. Another question. Do I need to be on an ADR, which is an income-driven repayment plan? It was recommended when I printed the public service loan forgiveness, I'm guessing waiver application.
Yeah, so the income-driven repayment plan is the best and it is recommended. There are 4 different type of IDR plans. Yes, you want to be on an IDR plan. The 10-year standard plan does make you eligible, but under the 10-year standard, you're scheduled to pay off the loan in 10 years anyway. They're going to give you a payment that will have you paid off within 10 years. So you won't get a benefit if you're under that plan and on PSLF at the same time. So FSA does have a loan simulator where you can enter some information. It'll show you what your payment would be under the IDR plans. And then when you apply for PSLF and when you consolidate, it'll tell you what repayment plans you are able to use or to apply for.
Yeah, fantastic. Thank you, Selena. And, a really great reminder about that. If you haven't gone to studentaid.gov yet and created your account, or even gone through the public service loan forgiveness help tool, the loan simulator is amazing. And in fact, it gives you all your different options for IDR, which is income-driven repayment, right? So different options. It tells you how long it would take you to pay it off. It also estimates what your monthly cost would be. Also, if you're considering consolidating your loans, they have a simulator for that as well. And so you can consolidate your loans and change your different or look at your estimated payment plans, look at your payment, like payoff date type of thing. But yes, it is recommended to be on an IDR when you're going for public service loan forgiveness. Okay. The next question. I've worked full-time for a nonprofit. Could I apply and be eligible for both kinds of loan relief? Good question.
It's all going to depend on your type of loan, but you can. If you have federal direct loan, all direct loans, you can qualify for both. Every borrower situation is going to be different though. PSLF is a bit of a longer process. You do have to be employed while making payments. Depending on your balance, it may not benefit you, but yes, you can be eligible for both if you have the right type of loans. So it's just going to depend on your situation and what the relief, how much balance that will cover. If let's say you are on the PSLF track, let's say you're about 5 years into PSLF and you apply for the Biden relief and you do qualify and receive $10,000 or $20,000 forgiveness. The only thing it will do, or what it will do, is it will lower your overall balance and then lower your payments for the remainder of 5 years.
Perfect. Yeah, that's a really good question. Great answer, Selena. I definitely also want to add that you want to go to studentaid.gov to check on your different loan types. Remember, we talked about the fact that the Biden student debt relief applies to certain loans, and of course, public service loan forgiveness applies to certain other loans. And as Selena is saying, if your loans are qualified for both, yes, you should actually apply for both, and then and you can actually get both. But again, go to studentaid.gov, make sure in your particular situation you have loans that qualify for both and that it won't disqualify you from one or the other. Okay. Great. Next question. I worked full-time for a nonprofit. Could I apply and be eligible? Oh, I'm sorry. We're going to answer that. Can you still apply if you are currently on unemployment? Let's start with that question. So what if you're unemployed?
So yeah, I mean, if you right now under the waiver, you can apply for forgiveness or be granted forgiveness even if you are not currently employed. But let's say you have the type of loans you've been paying for a period of time while you were employed for a period of 10 years, it's going to be the 120 payments, then you can apply. So that's the difference with the waiver, is that you do not have to be currently employed. Also, one thing, that employment doesn't have to be consecutive. So if you had gaps in between, so let's say you worked for 2 years and then you went to private service or took some time off for any reason, and then you came back, you can pick up where you left off. So that's also a great benefit. Just it does not have to be consecutive employment as long as it adds up to the 120 payments.
Yeah, very good, very good. Great question and great answer again. Second part of that question, although I think you answered it, is if you're not working with an employer, how or who would sign your application? Basically, as Selena was saying, your application would only go to your past employers, right? So let's say you had, I don't know, 5 years working for a nonprofit, but you're currently unemployed. You would go to your previous employer, who is a nonprofit where you're working full time, and they will be the ones who would sign your public service loan forgiveness employer certification, right? Before I answer this last one here that we have, and again, we still have a couple minutes, please feel free to add any more questions. We get this question a lot. Can I get a refund of my student loan if I paid it off during the pandemic?
For the Biden relief, there are refunds available. You can go onto their website and find, or to the Q&A. But basically what it is, if you were part of the payment pause, you didn't have to make payments and you voluntarily made payments, and now you find out that you qualify for the relief, you will be able to, they will be actually issuing some refunds when you get the relief. If not, you can call your servicer to find out. or to request the refund. But the best way to know is, so they have to be voluntary payments. Some of those borrowers with the FEL Perkins loans that we've been mentioning, they still had to continue making payments through the pause. They weren't eligible for that relief or for that. But if you just voluntarily made to take advantage of the zero interest to pay down your principal and you qualify for the relief, you would be eligible for a refund. And
Thank
then
you.
I'm sorry, one thing I wanted to add, because I get this question a lot, is understand that the PSLF program is continuing. So even if you're only halfway, if you haven't met the 10 years, but you're close, or you've already had 5, 6 years in, you can go ahead and apply. And the 1031 deadline applies or benefits mostly those people that have those older loans, longer term payments. If you've only, I get frantic messages from borrowers that have been working for 2 years and graduated in 2019. The program will continue and you will still be able to benefit. You're not losing out anything by the 31st deadline. All that's doing is helping borrowers with those older loans. They've also just announced other great changes to the PSLF program, all these account adjustments that are being done. So relief will continue on PSLF. It's just if you have those loans, if you've been paying long-term. So it will continue.
Thanks, Selena. Okay, so a couple of quick ones before I hit a bigger one that's more complicated. Do employer certifications need to be completed by the 31st of this month?
If you use the help tool to generate your application, not sign it, but just generate it, create it, then you will be, they will have a record of that. Department of Education will have a record of that. Then you can go ahead and get it signed and mail it or fax it in to Mohila. So you do not have to have the signature by the 31st, and that is clear guidance on the Department of Education website. And I've been told that directly from Department of Education, as long as you use the tool. If you do not want to go through the tool, you want a paper application and you want to mail it in, just make sure it's dated by October 31st. It doesn't have to be, it doesn't say anything about being postmarked, being received. Just make sure that it's signed by 1031.
What, you talking about the employer certifications?
Yes.
So the employer certifications have to be signed by 1031?
If they are not using the PSLF help tool. Just
Right.
they want to just print the application and they are not going through the help tool. Yes.
Yeah, I recommend everybody go through the help tool online, because you're going through your studentaid.gov account, and then you go through the tool. It'll print out the forms for you, and it'll log in when you finish the help tool, and then you could take the next month, 2, 3 to get your employer certifications done. Right? Otherwise, you have to rush like right now to get it done. But thank you, great question, great answer. We have a quick one here. What if former employer is unwilling to sign the forms, the PSLF forms?
There is an option on the PSLF help tool where it asks, or you can check if you're not able to get a hold of your employer or you're not able to obtain it. My suggestion is do your due diligence, try calling them, emailing them if they're closed. The Department of Education will still accept the application. You will not be able to download it. You will have to just wait for instruction from Department of Education because there's a different certification process for those employers. It will take longer, but there is an option if you are just not able to get a hold of the employer in the case where they're closed or something like that.
Okay, great. I know it's 2:00. I do want to hit 2 more questions real quickly. One question is, what if you were unemployed during the pandemic, graduated in 2021, but did not make any payments towards the 120 payments for public service loan forgiveness? Do you qualify? The answer is yes. So between the start of the pandemic, which I believe it's March 2019.
2020.
2020. Okay. Up to now, those months count towards public service loan forgiveness, even if you didn't make any payments. So you're getting those months for free as if you did not pay for those, right? So you can still apply for the waiver and get in using those months, especially if you have some weird loans that you need to get yourself into. Let's say you don't have any months whatsoever. You're just starting working for a qualified employer today, right? Well, you could still apply to get into the public service loan forgiveness program. The program doesn't expire. The waiver expires Monday. So the program's still alive. You want to apply for it so that as you continue to work with your public service loan, public service organization, you get credit towards your student loan. Okay, sorry. One last one. So there's a little confusion. Alan is confused about a 36-month waiver and where they could sign up if this is relevant to the public service loan forgiveness program. No. I think what we mean here is payments, student loan payments were waived, right? So you didn't have to make any payments. Interest was on student loans were stopped since the beginning of pandemic, and that's been about what, 36 months, I want to say, Selena. And that's what we mean. There's no 36-month waiver. Am I correct about this, Lena?
I'm not really sure what he's asking, but yeah, I'm not sure what he's asking, but months of payment pause or COVID forbearance do count towards PSLF. They just fill out the regular form. You just fill out that form for the both the waiver and the regular PSLF, and Department of Education will automatically provide do an adjustment as long as you certify that employment, so that you're not going to see automatic adjustments if you don't have that employment certified.
Okay, great. And I know we had some more questions, but unfortunately we are out of time. I do have some very last minute slides. Again, important student loan reminders. We've talked about this before. The deadline for the waiver is on the 31st. Keep up to date about the public service loan forgiveness program. New changes are happening. Just because the waiver ends doesn't mean the program ends. So keep up to date without the program. They're trying to expand it a little more to make it more inclusive. Also, student loan repayments start back up next year. So make sure your contact information is up to date with your loan servicer and studentaid.gov. They will be sending you notifications on when your loan is due, like new loan repayment is due, also what amount you need to pay. And if your loan is in default, stay updated with the Fresh Start program. I believe they're launching that early next year. And of course, subscribe to the DFPI's newsletter. We have a monthly newsletter. We keep you up to date about student loan events, webinars, other things that are happening, news, as well as consumer alerts. So please consider subscribing to our newsletter. Finally, we put together some student borrower resources. We have a web page dedicated for student loan information. So updates, upcoming webinars, events, as well as a whole list of government agencies, nonprofit organizations, and legal aid groups that provide assistance to student borrowers. Again, the link there, these slides will be made available to you, but it's dfpi.ca.gov/backontrack. We have a YouTube channel where we publish all of our webinars. And then these are all the different links that Selena uses. And these are great launching points for you to get started on your student debt relief, student assistance journey. And finally, Selena Damian, our student loan ombudsperson, information is at the very end. And with that, I want to say thank you. I'm sorry we went a little bit long. There's a lot of great questions, but thank you for taking the time to watch our webinar. Thank you for all the great questions. Thank you, Selena, for joining us. And please take care of yourself and each other. Have a wonderful day.
Thank you, everyone.